Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio. And before I introduce the guest for today, let's talk about the AMFI data. We just got the numbers a while back, and it is important to talk about them and throw greater detail and throw greater analysis on that as well. So we got the equity fund number. This time around, it has come in at a record high of 40,573 crore rupees. Considering the moves that we've seen in the markets in the month of June, this is something which is not a surprising number at all. And we've seen a lot of money come into the large caps as well. So this time around, if we talk about the large cap funds, the inflows have been at 970 crore rupees, which compares with 663 crore rupees that we saw in the month of May. Of course, it's still lower than the 2,100 crore mark that we saw in the month of March. But yes, there was a lot of interest in large caps this time around, be it Reliance Industries, be it HDFC Bank, or be it some of these consumption names as well. So that has translated into flows into the large caps. Small cap funds, the inflows have ebbed a little. So 2,263 crore rupees, those are the inflows, which compares with a monthly number of 2,725 crore rupees in the month of May. This number still is above that 2,000 crore of monthly mark that small cap funds have been seeing in terms of inflows. Similar is the story with mid cap funds, where the June inflows have come in at 2,528 crore rupees. This is slightly lower than what we saw in the month of May. Now, hybrid funds, let's talk about that, because they've been seeing a lot of flows in the last couple of months. It ebbed a little in March, but this time around, again in June, we are seeing that big drop that has come by. It is coming at 8,885 crore rupees, which compares with 17,991 crore rupees that we saw in the month of May. Let's talk about what led to all these numbers. There was a big inflow coming in from NFOs. So new fund offers, they saw inflows of 15,227 crore rupees, which compares with 10,140 crore rupees on a month-on-month basis, and a lot of it in sectoral funds, because we've seen how sectoral funds have seen a lot of interest. A lot of these NFOs have come in the sectoral funds. So that is the number that you should be watching out for. Big inflows there, 22,352 crore rupees. I think this number also is at a multi-month high. So this is the picture as far as the mutual fund data is concerned. In just a bit, we'll be talking about the systematic investment plan numbers, or the SIP numbers as well. It was at record high last month, near the 20,000 crore mark, and we'll see which way things go in the month of June as well. So that's the synopsis when it comes to the monthly AMFI data. Now let's get in the guest for today. I have with me Kartik Jain, MD and CEO of Shriram AMC, and Deepak Ramaraju, the Senior Fund Manager, Shriram AMC. Today we are going to talk about their investment strategy, their top funds, more ideas, and the outlook for investing in markets and mutual funds as well. Gentlemen, good afternoon, and thank you so much for joining us on MF Corner today on CNBC-TV18. Mr. Jain, let me first start with the response to the Nifty one-day rate liquid ETF that has been listed today. I just wanted to understand, who is the instrument generally suitable for, and how is the Shriram ETF different from the others?
Thanks for having us here on your program, Sonal. So the Shriram Nifty one-day rate liquid ETF, of the ticker symbol liquid Shri, is a product that actually invests in the overnight money market. Therefore, it's fairly secure, stable in terms of the returns. It's an ideal product for customers or investors who have surplus cash, which they would like to park through demat accounts in a product that gives fairly stable returns. Also for traders, and therefore also gives them, maybe more returns compared to a savings account, right? For traders, this is once we have the margin approval, this product can be used by them as collateral for margin pledge, and also for cash equitization, where if you sell a particular stock, and if you have a running account with your broker, you can same day move the money into a liquid ETF like this, like liquid Shri. The other point about this product is it's a growth plan, it's a growth option, and it has benefits like it avoids the need to track fractional dividends, because here the returns are reflected in the daily NAV. You also have a more easier tax calculation, because you only pay the capital gains tax when you redeem the fund, and not with every dividend payout. And finally, because the returns are come in every day, you have daily compounding in the growth option. So all in all, a very unique product that meets specific customer needs and helps in cash management in a very easy and a simple way.
Okay, take that point. Thank you for that explanation. And an expert advice is needed in such instruments where people want to invest, but sometimes it's difficult to understand that as well. Mr. Ramaraju, let me come to you. Let's try and understand more about AMC's strategy and a lot more. Can you explain what is the EQI model that the AMC follows? What does it entail, and what do you plan to achieve with that?
Thanks, Sonam. Thanks for having us on the show. EQI stands for Enhanced Quantum-Metal Investments. So it's a fund house philosophy that we are following across all the schemes in our company. So it's Enhanced Quantum-Metal Investments, combination of quantitative investments and fundamental analysis as well. So it's a combination of both quants and fundamentals coming together to form the quantitative quantum-metal framework. So here what we are looking at is the quantitative analysis acts as an input for our fundamental analysis, basically. So we have a team which is a quantitative team which consists of both quant analysts and as well as a fundamental analyst working together, forming the quantitative framework, basically. And the quantitative analysis involves a lot of factor models where we look at trying to analyze companies, shorten the universe basically, and then try to minimize the kind of simplify the research process. Once we simplify the research process, that will act as an input to our fundamental analysis. Basically, we are looking at shortening the NSE 500 universe, or for that matter, NSE 100 universe, come down to a shorter set of universe where the stocks are driven by the factor models. Those universe of the smaller universe is used as the fundamental analysis. The stocks are further refined, and then kind of the fundamental analysis overpower that, and then kind of relook into that in detail. Build a conviction around that, look at the fundamental analysis aspect of it, and then based on that, finalize the portfolio of stocks. The fund managers pick stocks based on this aspect, basically.
Okay, all right.
So
yes, please go ahead.
So the fundamental analysis finally will be like kind of overpowering the entire quantitative analysis. It's a combination of both quantitative and fundamental. So the main advantage that we get here is that we're able to kind of identify the winning set of stocks based on different factor models like your momentum, volatility, or valuation. That will enable us to identify kind of a sustainable trend and also deliver sustainable alpha in the medium to longer term. And that actually, the fundamental analysis actually looks at individually the stocks and build a conviction around that based on the stock models delivered by the quantitative analysis. So that conviction actually helps us to build a sustainable portfolio in the longer run. So that's EQI for us, basically.
Okay, thank you for explaining that and making sense of what the strategy Shriram AMC is following here. Mr. Jain, let me come to you. I wanted to understand what is the current AUM of the AMC. How has it grown over the last couple of years? And you've been in the market for a very long time, but this number is not as big if we compare it to the mutual fund industry's AUM. So what is the plan to grow this number?
Yeah, so our current AUMs are above 750 crores. And if you look at the number we were in March last year, we were 272 crores. We've grown over about 2.5 times since the last March. So as we're building out our products and our distribution. So the AMC is now in a pivot and transformation mode where we have launched what's called SAMC 2.0 or Shriram AMC 2.0, where we are rejuvenating and refreshing what the AMC stands for. There are three key pillars that we are using to drive sustainable growth. Three P's, if you will, the way I call it: the performance, product, and placement, as in distribution. So performance, like Deepak mentioned, is that we're focusing on the EQI model. We are going out there and saying we're a quantum metal fund house. And we deployed this very efficient, effective, sustainable alpha generating quantum metal approach to all our equity funds. And the impact is such that our funds have moved. We deployed this model in September last year, and all our funds have moved from quartile 4, quartile 3 to quartile 2, quartile 1 performance. That's the first P, the performance part, and we have built credibility in that space. Second is our product. We are launching products that essentially cover the risk return spectrum that a customer looks for. So be it equity funds that give a higher return and at a higher risk, where we have our equity, we have a flexi cap or our tax saver, or be the shorter end, we've got debt funds with lower return and lower volatility or lower risk. And we also have our bouquet of hybrid funds. So we are, even today's launch of Liquid Shree essentially deepens our debt solutions, and strengthens out this portfolio. That's the second P. And we'll continue to launch differentiated, unique products that meet customer needs in a very relevant way. The third, of course, is the third P is placement, where on distribution, where we are having a two-pronged strategy. We are working very closely with the Shriram Group channels. The Shriram Group has a fairly large footprint and strong brand trust, and across their entire branch network, their agents, the customers, even employees, to deepen that ecosystem. And we also parallelly, second leg of our strategy is to reach out to the external distribution channels. Mutual funds still remains a distributor-led, primarily distributor-led kind of a industry, and the group Shriram Group is known for working with channel partners closely to build the businesses, right? So we're working closely with distributors and going out to them and showcasing our approach, a quantum metal approach, a very customer-based product positioning. And I must say that we're getting very strong, very positive traction with all the distributors who we meet. And they've clearly said that this particular quantum metal approach and the results, no other, not many or none, no other AMCs might be following an approach like this as a quantum metal fund house. So that covers our penetration and building strong placement. Idea being that reaching out, making sure that our products are available to our customers. A final point there, today's product, Liquid Tree, also is available on the exchanges, and any customer can access it through their demat trading account. So again, we're making sure that the products are available to the clients. So this 3P strategy is what we are driving. We believe that if we get this right over time, it'll help us build sustainable growth in the AMC.
And you're right about how distribution plays a very important role here. And there's still so much ground to cover, right? We do have a lot of investors to reach out to who are still not investing in mutual funds. So that makes total sense. Mr. Ramaraju, let me come to you. This is a question I'm sure you get very often, but considering that this is the hot topic, I want to understand your sense in markets currently. Let's first start with equity, and then we'll discuss the other segments, because we got the equity flows as well at a record high yet again. And this is coming, just after that big election news. We have the budget, which is upcoming as well. What is your general sense?
Definitely, yes. The retail participation has been increasing in the markets. That's clearly visible in the flows that we are seeing in the mutual funds. And more importantly, purely from a market perspective, markets are trading at all-time high, driven by the stable government at the center. We're also having the prevailing strong economic conditions, and the government-led policies and reforms have been quite strong. The spending and the capex spending from the government side has been very strong and robust. That's also initiating some more capex spending from the private capex as well. So these are some of the factors which are driving the markets quite significantly. And obviously, the valuations have been quite stretched, especially in certain sectors or counters, might be the mid caps and small caps. Some of the stocks might be trading at expensive valuations. And more importantly, the markets are set for kind of a 100-day agenda, I am having very high expectations on the 100-day agenda of the government. That's kind of what is kind of prevailing in the markets as of now. And more importantly, the capex and the order flows are being quite strong, and that's driving some of the sectors like your defense, railways, energy, or some of the sectors like this. And some of the consumption-led themes are also getting played out because of this, actually. So these are some of the sectors that can prevail, and some of these themes are multi-decadal themes that's going to play out, because India as a country needs huge amount of capex spending, and especially in the space like infrastructure or defense or railways, and even on the transformation of your energy as a whole. These are some of the sectors that will play out for multi-years going ahead. And more importantly, what we need to watch out for is the execution risk. Though definitely most of the companies are getting the orders and the order flows are being quite strong, the execution risk is what we need to be monitoring pretty closely. That can be detrimental if the companies are not able to stand up to the order flows or the kind of earnings expectations. So those stocks can get beaten down as well. So corporate earnings momentum is continuing to maintain, and we are going to see a sustaining momentum coming in the earnings front. And some of these factors are going to remain on the top, and make sure the valuations are also being expensive, and they're going to remain expensive for some more time. So we're not going to see a major correction in the markets despite all these factors, because even if the correction comes, it's going to be a price correction at certain stock levels. I'm not expecting a deep correction coming into the market, because the retail participation is quite strong, and they're going to continue for the medium term and the longer term. And obviously, the inflation is coming down. We are also heading closer towards a stable inflation regime. So that means to say the central bank can also cut interest rates, which can boost further, kind of stimulate the growth further. So that's going to be the factors which is going to drive the markets further more. And it's kind of getting priced in over a period of time, and we are heading as we get closer to the rate cut cycle. So that's more about the markets as of now.
You know, you spoke about how SIP number is something that would keep the markets the way it is. SIP inflows have come at 21,260 crore rupees. We just got that number from the Association of Mutual Funds of India. It is at a record high yet again, 1.7% up on a month-on-month basis. And there's been just one sustainable growth that we are seeing for the SIP number for sure. Again, at the 21,260 crore mark, very close to that $3 billion monthly SIP figure. We'll be soon talking about that number as well. But for now, that's the big number that we are talking about. Welcome back to MF Corner. We still have with us Kartik Jain, the MD and CEO of Shriram AMC, and Deepak Ramaraju, the Senior Fund Manager at Shriram AMC. Gentlemen, thank you so much for patiently waiting by. Mr. Jain, let me come to you. Now that we are talking about markets still being in fine fettle, retail investors also pumping in a lot of money, any themes that you're liking in a market which looks very overvalued? Any pockets where you can see some value left?
So I think the value, it'll largely be in sectors that still have some momentum still left in them, and obviously driven by the policies at the central level. And for example, you have sectors like possibly the auto, capital goods, or even real estate that could potentially be continuing their momentum. And of course, the perennial favorite IT is still waiting for a comeback. So we need to check if when that returns. Although we do believe that there could be mid or small cap or mid cap kind of product-led IT companies that could start to show earning momentum and therefore more interest in the sectors. FMCG chemicals also could see a comeback as well. FMCG, once I think the rural turnaround is around the corner, supposedly, hopefully, with a good, strong, stable monsoon. And if the upcoming budget is more inclusive and socialistic, one can hope that there'll be more consumption, surplus or at the rural level, which can help FMCG as well. So yeah, there are a couple of these sectors that could possibly be looked at. But clearly, like you said, it's a high momentum market with valuations that are at all-time highs, and investors need to be cautious. And of course, here, if they're looking at equity, they should be here for the long term and take at least a 3 to 5 year view. And ideally, like we always say, get into the market through the SIP route.
And they are doing that, right? With record high numbers yet again, Mr. Jain. Mr. Ramaraju, let me come to you. This time around, we saw some ebbing of flows into small caps and mid caps. What is your fund house strategy here? Is it still a space you would be comfortable with?
Yes. With increasing retail participation, I think the mid caps and small caps are going to be kind of expensive and trading at expensive valuation. They're going to trade at expensive valuation. We're not going to get them at cheaper valuations at all. But having said that, one has to look at a long-term view on this sector segments, and that's where the earnings momentum is also picking up. It's not the large cap which is driving the earnings momentum; it's the mid cap and small cap which is driving the earnings momentum. And investors are clearly chasing the earnings momentum here, and that's what is visible in the kind of flows in the SIP numbers as well. And we will continue to stay invested. We have a flexi cap fund as of now where we make allocations towards more and towards the mid and small, and we are largely tilted towards the mid and small compared to the large, compared to the benchmark. So we will continue to stay invested, and the EQS strategy will help us to pick out the right kind of stocks into the portfolio. So that's where we'll continue to stay invested on the mid and small. But we'll be cautious about the execution. So that's the key thing here.
Okay, and that's where it's best for any retail investor to go to an expert and experienced fund managers as well. Mr. Jain, let's talk about debt funds, because India has now entered the JP Morgan bond index. There's possibility of rate cuts. How are you looking at that particular space, the debt fund performance going forward?
The JP Morgan bond index, India's allocation would increase from currently 1% to about 10%. And we're already seeing, we expect about incremental inflows to about $20 billion, of which about $8-10 billion already has come in. So this clearly, I think, with the upcoming rate cut as well, it should give a result in terms of better, lower. Of course, the real yields go down, higher MTM impact on the debt category.
Okay, all right. And this was one category which at least the investors were very wary of after the debt taxation changes. But that makes sense. Gentlemen, it was a pleasure speaking with you. Thank you so much for joining us today and talking to us about your strategy. What plans do you have for the AMC going forward and your outlook on markets as well?
Thank you so much.
Thank you.
Okay.
Thank you.
Okay, all right. Before we wrap on the show, let's quickly talk about the SIP numbers because they've come in at a record high yet again. And the number has come in at 21,262 crore rupees versus 20,904 crore rupees. That bar just keeps increasing. That's the kind of contribution we are seeing from retail investors. So that's the mutual fund report card. But with that, we'll take your leave on this edition of MF Corner today. Stay tuned for Closing Bell to take you through the last hour of trade.